Hey Bowtie Nation, Joseph Hogue here, and a great video today on what could be a new bull market in 2022. Evidence that we actually saw a bear market last year and a rebound potential this year. I'm going to turn it over to our resident stock trading expert, Thomas Carvo, for a great tutorial on what the market is missing and how to find those bull market stocks.
What is going on, everybody, and welcome on into the video today. We are talking timing the stock market. Now, you may have heard people tell you time and time again, you can't time the stock market, and there is a ton of data to back that up. So this data right here shows us exactly what your returns would look like since 1930 if you were to just not touch anything, leave your money invested in the S&P 500. Okay, on the left-hand side, we can see that your returns would be over 17,700%. As we go through, if you were to somehow, some way pull out your funds, pull out your money on the 10 worst trading days in each of these decades over the years, right, you'd be looking at over 3.7 million % returns. That's insane, and that would be amazing. But let's say you're not as lucky, okay? Let's say that you ended up excluding 10 of the best days in the decade over the years. Well, since 1930, you'd be looking at only a 28% return. That is wild because the S&P 500 did nearly 28% in 2021 alone, okay? Now, if you exclude the best and the worst 10 days per decade, you'd be looking at 27,000%, which is actually still better than your returns if you didn't touch anything. But again, you'd still have to be a lot more active, and you would need to perfectly time the best and the worst trading days of the year. So it's very unrealistic to think that we can time the stock market, but there are things we can time, and there are things we can do in terms of spotting reversals to the upside and to the downside. So today I want to look at some data that we can get access to for free on the internet. We'll talk about where you can get access to it. We'll talk about what this data means, and then how we can use that to our advantage to ultimately look at the stock market, look at stocks, look at other sectors, and say to ourselves, this sector is looking like it's reversing. It's coming out of a bear market, going into a potential bull market, or we're starting to see signs of a reversal. This could be a really opportune time to take advantage of the potential reversal and capitalize on really, really nice gains. Again, are we going to be in the best 10 days, the worst 10 days? We don't necessarily know. But what we do know is we have data to back our decisions. And this data can make us become fundamentally better investors and can make us a lot more money. We'll be capitalized on much bigger moves and trend reversals in the overall markets. Now, you may have heard the term bear market. Now, a bear market actually is classified when a market experiences prolonged price declines, typically 20% or more from recent highs, which also comes along with pessimism and negative investor sentiment. Now, the reason why we mention that is because despite this past year in the stock market, take a look at this. It was a crazy year in the stock market, don't get me wrong. The S&P 500 up 26.9%, the Dow up 18.7%, and the NASDAQ 21.4%. Those blew away the average returns that we see in the stock market every year. Now, again, we don't hit the average every single year. The average is an average for a reason, right? We have years above, we have years below, and it averages out to roughly that 10% or so on the S&P over the past 30 years or so. But I point this out because while the overall markets may have looked very, very bullish and very, very green in 2021, that's actually not the case for the majority of stocks that we can trade publicly in the stock market. Now, why is that the case, and how do we know that? Well, that's where we're going to dive into some of this data. All right, so now we're going to talk about some of these charts and some of these numbers. Now, I love looking at charts. I'm a very technical person in nature, and if you want to dive deeper into technical analysis, Joseph and I put together a full technical analysis trading course that will be linked in the description of the video down below. If you want to check that out, that will always be there as a resource for you guys in the future. I'll have a little bit more on that later, but let's dive into this right now. So this chart right here from barchart.com, what we are looking at, it's a free site. We can get access to information for free. This is telling us right now the percentage of stocks above the 200-day moving average. So essentially, look at the past 200 trading days, average out that price, we get a line, and if the stock right now is above or below that line or that level, that price point, that will tell us, right, if it's above or below, and that'll give us the information on this chart. So right now we are looking at, as we speak, roughly 44% of stocks are above the 200-day moving average. So less than half of stocks are actually above that 200-day moving average. So less than half of stocks have broad scale positive momentum over the recent weeks and months of their trading. Now, the 200-day moving average is a lagging indicator, right? Because of course, something can happen the next 10, 20 days, the next month, let's just say, and the stock could rocket off of good earnings, could be some good news, partnerships, whatnot, right? So the 200-day moving average is almost a lagging indicator, but it's a really good indicator to get a sense for how things are shaping up across the board. And if you look back, you'll see that this peaked out up in the 90s in February and has been trickling off really for the past year. About 11 months now, this has just been trickling off to the downside, and we did hit a point where less than 35% of stocks were trading above their 200-day moving average. So in a bull market, this is not something that you generally will see. You'll see a lot of stocks that are, building momentum. Maybe they're not kind of going straight up parabolic like we kind of saw a lot of stocks do in 2020, 2021, but they're kind of building higher lows. They obviously have their pullbacks, but those pullbacks are bought up over time and they trend higher. And generally speaking, they're trading above that 200-day moving average. Now let's look at one more. The 50-day moving average. This is a shorter term indicator, but it's taking the average of the past 50 trading days and essentially saying, okay, are we above or below? Now, this isn't as lagging of an indicator, so it's a really good indicator for strength, strong markets, and throughout this bull market run, the S&P and many stocks like Apple, many big name tech stocks have held above their 50-period moving average. So it's a great sign for positive momentum as of late, recent weeks and months. Now take a look at this. We've also seen some crazy volatility here. Over 85% of stocks were over their 50 moving average back in February of 2021. We actually hit a point here in December of 2021 where less than 20% of stocks were trading above their 50-period moving average. That's crazy. That's some crazy volatility to see that in 1 year without having a real crash, kind of like what we saw in March of 2020. Now, that obviously brought a lot of stocks down. If we take a look at the past 5 years of this chart, well, yeah, go back to March 2020. Yes, we saw a big drawdown in the overall markets. A lot of stocks were very soon trading below their 50-period simple moving average. And yes, we saw less than 5% of stocks at one point that were trading above. But we got down to sub 20%, and that happened kind of naturally. It didn't happen in 1 week or a month or 2 months after a massive drawdown or crash. It kind of slowly trickled down. And that's what's really interesting when we look back the year of 2021, the bull market on the surface. But a lot of stocks, that wasn't the case. So for many individual investors who are more of stock pickers, where you look to see, undervalued stocks, or you want to look at stocks that could outperform the indices, the overall market, right? Well, it has been a very difficult year for you in 2021. And even so far as we move into 2022, we'll see how that changes. But now we want to talk about that reversal. So there's a lot of stocks to choose from these days, and a lot of people may be feeling the same exact way. Well, I like this stock, I like this stock, I like this stock, I like this sector. How do I choose? How do I kind of identify those stocks and those sectors that are starting to reverse, that now the bottom is in? I don't want to buy these things as they keep going lower and lower and lower, because who knows how much lower they could go. But there is something that we can do, and we're going to be talking about something called the golden cross. So the golden cross is when we see a shorter term moving average cross above a longer term moving average. And one of the best indicators, or one of the best golden cross kind of techniques that we have seen throughout history has been the 50 crossing the 200. There's a reason why we talked about the 50-period moving average and the 200 just a minute ago, because this is our example of that golden cross. The 200-period moving average is a lagging indicator, so it's going to be slower to pull back. If a stock pulls back this week, that's not going to be reflected very strongly in the 200. If the stock pulls back this week, next month, and for 2 months it's in a downtrend, then we'll really start to see that 200 SMA really pull back to the downside. And when I say SMA, moving average, same thing. Simple moving average versus moving average. I'm saying the same exact thing here. So when we get the 50 moving average to cross the 200 on the 1 year, 1 day chart, that's showing us that in the shorter term, momentum's picking back up. And right now we are crossing up over that 200 moving average, and we have buyers interested in this stock or sector. And so that's the biggest takeaway from this video. Now let's actually show you guys some live examples. All right, so here we are over on finviz.com, and we've gone over to the screener tab. It's a free site to use. We talk about Finviz quite a bit, and we even have a bunch of predetermined screeners in that technical analysis course that Joseph and I put together, linked again in the video description down below. So what I'm going to do is I'm over on the screener tab. I have now pulled up the technical section of our screener, and now I have the 50-day simple moving average, okay? On that 50-day simple moving average, I'm going to click on that, okay? And we're going to look at this. 50 SMA crossed SMA 200 above. Now, what I'm going to have is I'm going to have a list of stocks where the 50 SMA has crossed the 200 and we have positive momentum to the upside. All right, so what I've then done is I've sorted these by market cap going from highest to lowest. So we're talking bigger companies first, and then we kind of scroll our way down. And so that's one way we can sort things out here on Finviz. But what I found is CL, Colgate, an interesting company that I think a lot of us know in terms of our oral hygiene. Take a look at this. Now, what we're looking at right here is up in the top left. They tell you SMA 20, SMA 50, SMA 200. So our orange line crosses our, I guess, lighter, almost yellow line right here, and that's indicated right here. So our darker orange line has crossed the 200 SMA, this lighter line right here at around $80. So now what we're seeing is that look what happened as we have crossed. Colgate hit up to a nice high up here towards $86 almost, and then it pulled back. But what are we seeing as we've gotten that cross? It started to bounce back to the upside, and Colgate has been one of those stocks showing really nice momentum over the past couple of months. Now, Colgate did go through a period of time from June through about October, November, where this stock was downtrending. But what happened here is that November and December, Colgate started putting in higher lows and started to trend higher. Now, by no means is this indication or this strategy, the golden cross, going to get you in at the absolute bottom. No, but this is a good strategy that's going to help you identify stocks that are building positive momentum back to the upside, and we're seeing a shorter term moving average cross over a longer term, which is really indicative of a stronger move back to the upside. One more example, ticker symbol MUFG. Take a look at this. What we can see right here is we have a lot of indicator convergence right here as we've started out 2022 on the right-hand side of our screen. But guess what? Our darker orange has crossed our lighter line right in here. And guess what happened when it crossed? Right in there, we have now gone from about $5.80 per share up to over $6.25 per share. That's a pretty substantial move in a very short period of time. And guess what signaled that move? That 50 SMA crossing the 200, and just like that, we're right back to the highs that we saw in September and October, and that's a great indication that this may have more room to go to the upside. So I want to make sure we understand that fundamentally it's difficult to time the market. It's very, very difficult, but there are things that we can do throughout bear markets and throughout downtrends in stocks that allow us to profit on the upswing and allow us to have almost a systematic approach to finding stocks that are curling back to the upside, that are building momentum, so we don't have to worry about finding bottom, so we don't have to worry about buying something that keeps going down. We're able to look at stocks, sectors, overall indices that are starting to make that reversal and let the recent momentum essentially dictate our investing approach or our trade. So if you want to learn more about indicators, technicals, drawing chart patterns, support, resistance, how to spot trends, how to build out your own trading plans, Joseph and I put together this course right here, Learn to Trade Stocks, a simple guide to technical analysis and trading, where we cover everything that you need to know and everything that you need to get started building out your own trading plans. That will be linked in the video description down below, currently running at 30% off. Hours and hours and hours of video lessons that detail everything that you need to know. Hopefully that is helpful. Again, check that out down below. Make sure you guys are subscribed here to the channel so you see more videos in the future. Glad to have you part of the community, and have an awesome rest of your day.